You have just landed in Bali. Your passport is foreign. Your bank account may be overseas. Some of your capital may already be stored in Bitcoin, Ethereum, stablecoins, or another digital asset. Now you need a practical answer to one simple question. How can a foreigner buy and sell crypto in Bali, Indonesia, without creating unnecessary banking, compliance, or security problems? Because here is the part most people only discover after something goes wrong. Buying crypto is not just about finding the cheapest price. Selling crypto is not just about sending tokens to someone you met through Telegram. And living in Bali does not mean every international platform, payment method, or informal crypto service is automatically suitable for you. Indonesia has a regulated digital asset ecosystem. Crypto assets can be traded as financial assets through the regulated ecosystem, but cryptocurrency is not recognized as legal tender for payments in Indonesia. Payments made within Indonesia are generally required to use rupiah. That distinction changes everything. In this video, I am going to show you how Indonesia's crypto system works, what foreign users should check before opening an account, a practical process for buying crypto in Bali, a practical process for selling crypto into rupiah, the most common mistakes foreigners make, and how Sungazer Live helps international clients navigate Indonesia's digital asset ecosystem with local support. Let's begin.
Bali feels international. You hear English, Russian, French, German, Mandarin, and Australian accents every day. Digital nomads work for companies in Europe. Investors manage portfolios from villas in Canggu. Foreign entrepreneurs operate Indonesian companies. Crypto communities meet in cafes, co-working spaces, conferences, and private groups. But the financial infrastructure underneath Bali is still Indonesian. Your rent may be quoted in rupiah. Your employees are usually paid in rupiah. Your company expenses are recorded in rupiah. Your local bank operates under Indonesian regulation, and when you want to convert digital assets into money that you can actually use locally, you enter Indonesia's regulated financial system. This creates a practical gap. A foreigner may understand crypto very well, but still know very little about Indonesian banking. Another person may understand business in Bali, but have no idea which digital asset provider is regulated. A third person may have used an international exchange for years, but discover that deposits, withdrawals, identity checks, or local banking access work differently in Indonesia. The technology is global. The compliance process is local. That is where most of the confusion begins. When someone says, "I need crypto services in Bali," they may mean three completely different things. The first need is buying. They hold fiat currency and want to acquire a digital asset. The second need is selling. They already hold crypto and want to convert part of it into rupiah. The third need is liquidity. They need a repeatable, documented process for moving between digital assets and the local financial system. These are not identical problems. A person buying $200 of crypto has different requirements from an investor selling a large position. A tourist has a different profile from a kitas holder. An individual has a different compliance structure from a PT/PMA. A long-term investor has different requirements from a business treasury. Treating all of them as one generic crypto transaction is where bad decisions start. Before choosing a platform, you must first define what you are actually trying to do.
One of the most common misunderstandings among foreigners is the idea that crypto is completely illegal in Indonesia. That statement is inaccurate. The correct distinction is this: crypto assets operate inside a regulated trading and investment ecosystem, but cryptocurrency is not recognized as legal tender for everyday payments. You should not confuse owning or trading a digital asset with using that asset as official currency at a restaurant, hotel, villa, or retail business. Bank Indonesia has consistently stated that virtual currencies are not legitimate payment instruments in Indonesia, and that rupiah is the lawful currency for domestic payments. For a foreigner living in Bali, the practical model is therefore not send crypto directly to every local merchant. The compliant model is hold or trade digital assets through an appropriate channel, convert the required amount through a lawful financial route, receive rupiah through an accepted banking or payment process, then use rupiah for local payments. It is less exciting than pretending an entire country has abandoned its national currency. It is also considerably more defensible.
Indonesia's regulatory structure has also changed. On the 10 January 2025, the supervision of digital financial assets, including crypto assets, transferred from Bapepti to the Financial Services Authority, OJK, with Bank Indonesia also receiving responsibilities in relevant areas. The transition followed Indonesia's Financial Sector Development and Strengthening Law and Government Regulation No. 49 of 2024. This matters because many foreign users still rely on old articles, old platform lists, and old explanations written before the transition. The regulator has changed. The terminology has changed. Licensing continues to develop. The available asset list can change, and enforcement is not theoretical. OJK has issued warnings, fines, suspensions, licensing decisions, and consumer protection measures across the digital financial asset sector. For international clients, the lesson is simple. Do not rely on screenshots from an old blog post. Do not rely on a social media account claiming that a platform is basically licensed. Check the current regulatory status. Crypto changes quickly. Compliance documentation somehow changes even faster, perhaps because bureaucracy refuses to let blockchain have all the fun.
This is not a small experimental market. According to OJK's May 2026 report, digital financial asset traders held approximately 21.70 million consumer accounts as of April 2026. OJK had approved 32 entities across the crypto trading ecosystem, including 2 exchanges, 2 clearing and settlement institutions, 2 custodians, and 26 digital financial asset traders. Crypto transaction value during April 2026 reached approximately 22.98 trillion rupiah. These numbers explain why foreigners should take Indonesia's crypto infrastructure seriously. The market is large. The institutional structure exists. The regulatory framework is becoming more detailed, and the government is actively supervising the sector. The question is not whether crypto exists in Indonesia. The question is whether you are using the correct part of the ecosystem for your situation. Not every token is automatically available. A regulated trader cannot simply offer every token that exists on the internet. Under OJK's framework, trading operators are prohibited from trading digital financial assets outside the list established by the relevant exchange. This means an asset you hold internationally may not necessarily be available through every Indonesian platform. Before sending crypto, confirm whether the asset is supported, whether the blockchain network is supported, whether deposits and withdrawals are currently active, whether a memo, destination tag, or additional identifier is required, and whether the platform allows the transaction under your account profile. Never assume that the same token symbol means the same deposit route. A token sent through the wrong network does not become more recoverable because you were in a hurry.
The 5 questions to ask. First question 1. Is the provider currently regulated in Indonesia? Do not settle for logos, partnerships, or vague claims about compliance. Confirm the legal entity and its status. Question 2. Does the provider accept your nationality and residency profile? A foreign passport does not guarantee automatic eligibility. Question 3. Which documents are required? Indonesia has dedicated AML, CTF, and proliferation financing rules for digital financial asset traders. KYC is not decorative. Question 4. Which banking and payment rails can you use? Do not fund an account until you understand how you will withdraw from it. Question 5. What will the transaction actually cost? Look beyond the headline trading fee. Check the spread, deposit fees, withdrawal fees, and limits. A service can advertise a low fee while offering an expensive spread. Platform selection should follow your facts, not someone else's anecdote. The goal is a process that is legal, secure, explainable, and repeatable.
A practical foreign user should prepare a basic compliance pack before making a meaningful transaction. Not every provider will request every document, but being prepared can prevent delays. Your pack may include a clear copy of your passport, current visa or residency documentation, proof of address, a bank statement showing account ownership, evidence of income, investment proceeds, business revenue, or another legitimate source of funds, wallet transaction records, exchange statements, and a simple explanation of why you are buying or selling the asset. If you are selling crypto that is moved through multiple wallets, keep the transaction history. If the assets came from an exchange, preserve the account records. If they came from business activity, mining, investment proceeds, token compensation, or an earlier purchase, retain supporting evidence. The goal is not to produce documents for entertainment. The goal is to create a clear and explainable transaction trail. Now let us make the process practical. Step 1 is to define the transaction before selecting the provider. Ask, how much do I want to invest? Which currency do I currently hold? Which digital asset am I considering? Am I investing personally or through a company? Do I need a one-time purchase or recurring access? Do I plan to hold the asset on the platform or withdraw it to a private wallet? How will I eventually sell it? This final question is often ignored. People plan their entry and improvise their exit. A better process designs both directions before the first deposit. Step 2 is to select the right regulated route. The correct option depends on your profile. An individual investor with an Indonesian bank account may have a relatively straightforward path. A newly arrived foreigner without local banking may face more limitations. A high-volume investor may care about liquidity, execution, and transaction limits. A PT/PMA must consider company authority, accounting treatment, tax consequences, internal approvals, and the separation of corporate and personal funds. Do not choose a platform only because another expat mentioned it at lunch. Their nationality, visa, bank access, transaction size, risk profile, and objective may be completely different from yours. Platform selection should follow your facts, not someone else's anecdote.
Step 3 is verification. Use accurate information. Make sure names match across documents. Use an account that belongs to you or to the correctly authorized legal entity. Do not borrow someone else's bank account. Do not create mismatched profiles. Do not use a friend as an informal conversion bridge. Complete all required verification steps. Activate two-factor authentication. Use a dedicated email address where appropriate. Secure the recovery method. And verify that you are using the official application, domain, and customer support channel. Indonesia's OJK has issued dedicated cybersecurity guidance for digital financial asset operators, emphasizing stronger authentication, access management, resilience, and consumer protection. The provider has security responsibilities. You still have responsibilities of your own.
Step 4 is funding. Use the banking or payment method approved for your verified account. Confirm the recipient details. Confirm the account name. Confirm the reference number. Then begin with a test transaction. A small test can confirm that the banking route works, that the deposit is credited correctly, that your account limits are understood, and that you know how the interface behaves. After the test succeeds, you can evaluate whether to proceed with the remaining amount. A test transaction may feel slow. Recovering a full-size transfer sent through the wrong route feels considerably slower. Step 4 is funding. Use the banking or payment method approved for your verified account. Confirm the recipient details. Confirm the account name. Confirm the reference number. Then begin with a test transaction. A small test can confirm that the banking route works, that the deposit is credited correctly, that your account limits are understood, and that you know how the interface behaves. After the test succeeds, you can evaluate whether to proceed with the remaining amount. A test transaction may feel slow. Recovering a full-size transfer sent through the wrong route feels considerably slower.
Step 5 is execution and custody. Before placing the order, understand whether you are using a market order, limit order, or another supported order type. Check the estimated price. Review the spread. Review the total cost. Then decide where the asset will be held. Keeping assets on a regulated platform may offer convenience and easier trading access. Withdrawing to a private wallet gives you greater direct control, but also creates direct responsibility. If you control the private key, you control the asset. You also control the possibility of losing it. There is no password reset desk for a seed phrase stored badly. If you withdraw, verify the address and network. Send a small test amount first. Wait for confirmation. Then send the remaining amount.
Selling crypto is not simply buying in reverse. A sale introduces different risks. You must confirm that the receiving platform supports both the asset and the network. You must understand the deposit requirements. You must check whether the account can receive the intended amount. You must review withdrawal limits before the crypto arrives. And you must be prepared to explain the origin of the assets if the provider requests additional verification. A large incoming transfer with no clear transaction history may create delays. That does not automatically mean the assets are suspicious. It means the regulated provider may need enough information to understand the transaction. A practical selling sequence looks like this. First, verify that the platform supports the asset. Second, verify the blockchain network. Third, obtain the deposit address directly from the official platform. Fourth, confirm whether a memo or destination tag is required. Fifth, send a small test transfer. Sixth, wait until the platform credits the deposit. Seventh, transfer the remaining amount only after the test succeeds. Eighth, place the sell order and review the final execution price. Ninth, withdraw the rupiah proceeds through the permitted banking route. 10th, save the complete transaction record. This record should include the sending wallet, the transaction hash, the receiving platform, the amount deposited, the executed price, the fees, the rupiah proceeds, and the final bank withdrawal. Documentation matters for compliance. It also matters for accounting, taxation, dispute resolution, and your own financial records. Consider a common illustrative situation. A digital nomad has moved to Canggu. They earn income from overseas clients. They hold part of their savings in stablecoins. They need rupiah for rent, transportation, food, and local services. The mistake would be to assume that every merchant should accept direct crypto payment. The practical approach is to identify a lawful conversion route, complete the required verification, sell only the amount needed, receive rupiah through an accepted channel, and then make local payments in rupiah. The key objective is not maximum transaction frequency. It is predictable access with a clear record.
Scenario 2 is the foreign investor. They already understand digital assets. Their problem is local access. They want to buy crypto while living in Indonesia or sell existing holdings into rupiah. For this person, the decision should focus on account eligibility, liquidity, supported assets, fiat access, transaction limits, withdrawal reliability, security, and regulatory status. They may not need a lesson explaining what Bitcoin is. They need help understanding how the Indonesian ecosystem applies to their profile. That is a very different service. Scenario 3 is a foreign-owned Indonesian company, or PTPMA. This is where the process becomes more sensitive. A company should not casually mix shareholder wallets, director accounts, company funds, and personal exchange profiles. Before a PTPMA buys, sells, holds, receives, or transfers digital assets, the company should review its permitted business activities, corporate authority, board or shareholder approvals, banking arrangements, accounting treatment, tax implications, source of funds, beneficial ownership, and the purpose of the transaction. A founder may personally own crypto. That does not automatically make the asset company property. A company director may control a wallet. That does not automatically mean the company has approved the transaction. Corporate digital asset activity requires documentation and professional review. This video cannot determine the correct legal or tax treatment for a specific PTPMA that requires qualified Indonesian legal, accounting, and tax advice.
Let us finish the practical section with 7 common mistakes. Mistake number 1, using an unverified intermediary. A stranger offering instant conversion through Telegram may be convenient. They may also provide no clear legal entity, no consumer protection process, no documented pricing, and no reliable recovery mechanism. Mistake number 2, sending crypto before confirming the network. USDT on one blockchain is not automatically interchangeable with USDT on another deposit route. The token symbol may look identical. The infrastructure underneath it may not be. Mistake number 3, focusing on deposits while ignoring withdrawals. Before sending money or crypto into a platform, understand how funds can come out. Check bank eligibility, account name matching, limits, processing times, fees, and compliance conditions. Mistake number 4, mixing personal and corporate funds. This creates accounting confusion, legal uncertainty, tax risk, and ownership disputes. Mistake number 5, failing to preserve transaction records. Screenshots are helpful. Transaction hashes, account statements, agreements, invoices, bank records, and wallet histories are better. Mistake number 6, treating crypto as legal tender for local payments. Trading and ownership are different from payment acceptance. For domestic payments, the lawful currency framework centers on rupiah. Mistake number 7, trusting urgency. Scammers create pressure. They tell you the price will disappear. The wallet will close. The officer is waiting. The opportunity expires in 10 minutes. Legitimate compliance processes rarely improve because someone is shouting at you through a messaging application. This is where local support becomes useful. Local support should not mean avoiding compliance. It should mean understanding compliance before it interrupts the transaction. Sungazer Live helps foreign clients navigate the Indonesian digital asset environment by starting with the client's actual situation. Who are you? Where are you resident? Are you acting personally or through a company? What asset do you hold? What currency do you need? What banking access do you have? What transaction size are you considering? What documents support the source of the funds or assets? What is your preferred custody structure? And what risks must be resolved before proceeding? Only after answering these questions does platform comparison become meaningful.
Sungazer Live is a Bali-based crypto exchange aggregator, a new economy consulting practice serving clients since 2022. We focus on foreign nationals, expats, investors, and foreign-owned companies seeking practical access to Indonesia's digital asset ecosystem. Our role is to help clients understand the regulated landscape, compare available routes, identify platform-specific requirements, prepare for onboarding, review transaction mechanics, recognize security and compliance risks, and coordinate with appropriate regulated providers and professional advisors. We do not promise shortcuts. We do not tell clients that regulation can be ignored. We do not present every foreign user as identical. And we do not treat a complicated transaction as simple merely because the blockchain transfer itself takes a few minutes. The transfer may take minutes. The consequences of a poorly structured transaction may last much longer. Our presence in Bali matters because foreign clients often need more than an online FAQ. A person landing at Bali airport may need to understand which documents to prepare. An expat in Kuta may need a repeatable conversion process. A digital nomad in Canggu may need help distinguishing a regulated route from an informal offer. A PTPMA may need to identify which questions belong to a crypto platform, which belong to a bank, and which require legal or tax advice. Sungazer Live operates across Kuta, Bali Airport, and Canggu. We connect international experience with local market understanding. Not to remove the rules, to help clients work through them properly. Before you buy or sell crypto in Bali, use this checklist. Confirm the regulated legal entity. Verify whether your nationality and residency profile are eligible. Prepare your identity and transaction documents. Understand the deposit and withdrawal route. Check the asset and blockchain network. Review the fees, spread, limits, and processing rules. Use only official applications, websites, and support channels. Activate two-factor authentication. Begin with a test transaction. Keep personal and corporate funds separate. Use rupiah for domestic payments. And obtain professional legal, accounting, or tax advice when your situation requires it. The goal is not simply to complete one transaction. The goal is to create a process that is legal, secure, explainable, and repeatable. Buying and selling crypto in Bali is possible. But the correct route depends on who you are, what you hold, how much you are moving, which banking access you have, and whether you are acting personally or through a company. Indonesia has a large and increasingly regulated digital asset ecosystem. For foreign users, that creates opportunity. It also creates responsibilities. Do not begin with the token. Begin with the structure. Do not begin with the transfer. Begin with the transaction route. And do not wait until your money is stuck before asking how the system works. For practical guidance on buying and selling crypto in Indonesia, connect with Sungazer Live. Contact us through Telegram and WhatsApp at @Sungazerlive. Visit us in Kuta, near Bali Airport, or in Canggu. Sungazer Live. Helping foreign clients navigate Indonesia's new economy since 2022.